Brian Estes, Off the Chain Capital. Always a pleasure to have you back on Real Vision.
Thank you for having me, Ash.
Brian, it's always so much fun to have you on, especially looking forward to this conversation where we talk through Bitcoin valuation. And I think even more broadly than that, your thought process about technology, about markets, and about the way that valuation gets done in general.
Yeah, no, it's been a very interesting space to be in over the last 7 years, and it's fun to see all the traditional asset managers finally starting to pay attention to what's going on. So it's starting to get really exciting.
For a little bit of context, let's talk a little bit about your background and how you got invested and interested in Bitcoin.
So I started off in traditional finance when I was 22 years old. Started with a company called A.G. Edwards & Sons in St. Louis as a stockbroker. I was doing the retail stuff for a couple years, and then I picked up a few institutional clients, and I started focusing all my efforts on being an institutional equity broker. So I was there for 14 years. I left in 2004. I was a senior vice president when I left, and started my own registered investment advisory firm in 2004. And basically, I just cherry-picked my top clients and was managing money for them for about 10 years as an RIA. And basically, they were endowments and foundations in the St. Louis area. So I was their outsourced CIO for 7 endowments and foundations, managing about $350 million for them. And then in 2014, I learned about Bitcoin. I saw Cameron and Tyler Winklevoss on CNBC being interviewed by Andrew Ross Sorkin when Bitcoin was around $100. And coming from the traditional finance world, I just thought it was a total scam. I didn't understand what Bitcoin was. I just thought it was this internet funny money. I just didn't comprehend what it was. And it took me a good 6 months to figure it out. And after I figured out what Bitcoin was, which is basically just open source internet protocol software that allows us to transfer value peer-to-peer through the internet without having a third party clear that transaction. It just, like a light bulb clicked on, and it's like, I just understood how we were going to rebuild our entire financial system on blockchain technology. And so I convinced my wife into allowing me to sell my practice. And I sold my RIA and became a venture capitalist in the blockchain space. And, I had no idea what, a venture capitalist does, but, that's, kind of, how I got started back in 2014. And then just, got involved and, helped start building and financing and mentoring blockchain companies. And that's what I've done for the last 7 years.
Yeah, it's so interesting to me because you mentioned getting started in Bitcoin in 2014. But as you mentioned earlier, the journey begins 30 years ago in terms of how you think about markets, how you think about technology, and how you think about valuation. Walk us through that.
Yeah, I've always had a value tent, being, a professional portfolio manager, looking at undervalued assets, in traditional asset, minds, that's called Benjamin Graham or Graham Dodd investing, kind of like what Warren Buffett does. Basically, we're trying to find, a dollar's worth of assets for 50 cents. And so when I first started my career, I read, all sorts of books from Peter Lynch and, Benjamin Graham and how to be a great investor. And, but when I first got started, when I was 22, I really didn't know what I was doing. Fresh out of college from University of Illinois. And, I thought being a stockbroker was a financial management or analyst type job. But after I actually started doing it, I realized it was a sales job. And so I went to one of the most experienced people in our office at the time. We had about 100 and I think we had 105 brokers in our office. And Leo Sammet, he was around 80 years old, and he had started with A.G. Edwards 60 years prior. And, he was very successful. So I went into his office and I was like, hey, Leo, I'm new. You're successful. Can you share a few tips with me on how to have a long career in this industry and be successful like you are. And Leo, is kind of funny. I remember this like it was yesterday. He, and this was, I guess, 30 years ago? Yeah, 30 years ago this happened. But it's still so fresh in my mind. He looked at me. I mean, it was probably just for like maybe 10 seconds, but it seemed like it was like for at least a minute, like just kind of sizing me up. And I guess in his mind, he was thinking, should I really share the secret of success with this kid? And so he didn't say a word. All he did was he put his hand on a piece of paper and he slid it over to me across his desk. And he goes, just put all your clients in this. And what he slid me was a value line report on a company called Berkshire Hathaway. And so this is back in like 1991. Berkshire Hathaway was, it was less than $10,000 a share. I think it was 8,000 or something like that. And he goes, just put all your clients in this. And I looked at him and I was like, my clients aren't going to buy an $8,000 per share stock. Don't you have anything that's like $10 or $1, like a penny stock? And, that's what I was thinking in my head, because I didn't know how to value a company. I didn't know the value of, Warren Buffett, who ran the company. I didn't know how to value the free cash flow being generated by the company. I didn't know how to predict that interest rates were going to drop from 10% basically down to zero over the next 30 years, which would increase the value of the company. And so I was just unaware. And so I never bought the stock. And, over the next 30 years, Berkshire Hathaway went from, like I said, around $8,000 up to, over, I think today it's like 410,000 or so. And they've never had a stock split. And so, that's where I learned that, you don't pay attention to the price. The price isn't what matters. It's the value that matters. And I equate that to Bitcoin today because a lot of people are looking at Bitcoin at $61,000 a coin. And they're like, oh, I don't want to buy it. It's too high. I can't buy a whole Bitcoin. I rather buy like Dogecoin at, 23 cents. And that just doesn't make sense to me because, there's value to Bitcoin. There's really no value to Dogecoin. And so, I think what's going to happen is over the long run that, people that invest in Doge are going to be hurt, and people that, understand how to value Bitcoin will, be much better off.
One of the other things that I enjoy about your analysis, about the way you think this through, is your analysis of SCurves. Give us a sense about how you came across SCurves and why they're so important in the way that you form the thesis around technology.
Mm-hmm. Yeah, back in 1988, I had the opportunity to go to Cambridge University and the London School of Economics to do my study abroad my junior year. And when I was at Cambridge, one of the classes I took was about macroeconomics. We were actually in Sir Isaac Newton's classroom. He used to be a professor at Cambridge. And so we learned about S-curves. They're in bubbles, the history of stock market bubbles. And so it's always been important to me to use this information. And I based my entire career on, being able to foresee the next S-curves. So back in the early 1990s, so I graduated college in 1990. When I graduated, only 10% of U.S. households owned a personal computer back then. And by year 2000, it was 90% of households owned a personal computer. But when the personal computer revolution started, it started in the very late 70s, early 80s. And so, in 1980, about 0.1% of households had a personal computer. And so that's what S-curve is. It's the amount of time it takes for a new technology to go from 0% adoption to 10% adoption is the same amount of time it takes it to go from 10% to 90%. So you can go back and look at, shipping companies in the 1400s, railroads in the 1800s, automobile companies in the 1940s and 50s. I mentioned computers in the 80s and 90s. And then, I use this for, the computer S-curve, the internet S-curve, the mobile internet S-curve, which is basically Apple, and then now blockchain S-curves. So Bitcoin was invented in 2009. By 2019, 10% of US households own Bitcoin. And then last year, Brian Brooks, the comptroller of the US currency, mentioned that 15% of US households own Bitcoin. There was a survey that came out earlier this year of 30,000 people that showed 25% of US households own Bitcoin. So we're on this mass adoption, this mega trend of mass adoption of Bitcoin in the United States. And what this tells us, if it took 10 years to go from 0 to 10, then it's going to take 10 more years to go from 10 to 90. So from 2019 to 2029, in 2029, we should hit about 90% adoption of Bitcoin or digital wallets or some sort of crypto assets in our portfolios. And so this megatrend is in place and it's completely unstoppable. And you either get on board or you get run over.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.